Hey, what's up? My name is Albert. Welcome to my channel. I had sat in on Tesla's Q3 earnings call today, and then I read this article later, like about an hour ago, and I was like, man, I'm slightly triggered. I'm not gonna lie, I'm slightly triggered by this headline, and I think it's super misleading purposefully. And I just think that I want to like clear some things up because a lot of people read this, they probably don't know what's going on in the business. And I just want to clear some things up because I think this is a really misleading article. So let's get into it. So the headline of this article is Tesla earnings rebound, but will miss 50% growth target. All right. Just to be clear, in the transcript of today's call, they say as we look ahead, our plan will show that we're on track for the 50% annual growth production number this year. All right. And they do say that it's going to be just under 50% on the cars in transit or on the delivery side. And I don't think people understand what's going on here. I don't even know if this guy that wrote the article like does a good job explaining. But essentially, long story short, Tesla makes cars in China, right? They take those cars, they put them on boats, they ship them over to like Australia or Europe or whatever. And there's going to be a period of time where that car is shipped it gets to this destination, right? Keep in mind, this is very important. Every single car that is built by Tesla is already sold. Their demand is infinite at this point. They can't build cars fast enough, okay? So they basically say every car they build for the foreseeable future is already sold, right? Because there's so much demand that they can't keep up with it. All right, that's very important to understand as a fundamental, understanding for Tesla. All right, so what they're starting to do, because what they've been doing is they've been just front loading all the cars they build and shipping them overseas. So by the time it gets to the destination, that it's still going to be within that quarter. The issue with that is that they're basically super rushing all the deliveries in China, for example, or locally, because they haven't sold any cars in China because they were sending those cars outside, right? So at the end of the quarter, they're just rushing all these deliveries within China, and that creates a poor experience because you're rushing when you should have been doing everything more even keel, right? So what they started doing is they're trying to make everything more even keel. So they're going to be, okay, we build some cars, we sell some here, we sell some there. And then at the end of the month or end of the quarter, there's going to be cars that are still on boats, right? And that's why there's a gap. That's why here you can see they produced, 345,000, but they only delivered 325,000, right? Or I'm sorry, they produced 365,000, but they only delivered 340,000, right? And that was their goal. Their goal was to hit 385,000, right? And that's the gap. So there's no fundamental difference on their business other than this number being reported in Q3 or Q4, okay? So that's a very important thing to understand about the business, especially if you're going to read a headline like this. All right. So let's get into it. Okay, so it says that it's gonna. So this headline says, okay, we're gonna miss by 50%. Which, I mean, if you're talking about deliveries versus production, I guess that's true, but it doesn't matter to the business. It doesn't affect the business at all. What's important is the production number. Okay, so you're harping on this. Okay, it's gonna fall short of its 50% growth number and target number sales this year. And once again, keep in mind that there's not enough boats to deliver all these cars, right? So they're rushing everything at one time. There's not enough boats. They have to do more even keel. Okay. All right. Sorry. Just calm down. Okay. So as recent as July, it says it is aiming at 50% growth for its 936,000 cars in 2021, but 2 quarter disappointing deliveries caused by supply chain issues and COVID-related shutdowns in China would have been a reach to hit its goal for 2022. Okay. So once again, you're talking about deliveries, but I'm telling you the reason this production number is what's important, and that production number is what we hit goal in Q3. All right. The company has previously reported it delivered $340,000 in the third quarter, a record for the company, and 42% from a year ago. But it would have needed to deliver another 495,000 cars in the fourth quarter in order to hit that 50% growth target. So once again, they say we're gonna hit our 50% growth target, right? But you're harping on that delivery number, which doesn't really matter. Okay. Tesla sells a fraction of sales of established automakers. Okay, I don't know what that's relevant, but it is by far the most valuable automaker in the world, worth more than 10x, worth more than 10 largest market automakers in terms of sales volumes. Its rapid pace of growth is one of the things driving that lofty stock valuation. That is true, right? Because Tesla's growing at 50% every year, that's why it has a higher valuation. One thing that you also want to note is Tesla also has a huge operating margin, right? Most auto manufacturers are selling their cars and making, what is this? 8% on average. Tesla's making 17%, right? That's a pretty big difference, right? That will increase your valuation by quite a bit. And look at this growth curve, right? Tesla's continuing to build factories, and these factories have not kicked in yet. So they've already spent the money to build these factories. So every incremental car like a factory in, let's say, Berlin produces, that's going to be incremental revenue, but the operating cost is not going to increase by that much, right? Because it doesn't cost them anything to build that car operationally, because you're not going to, the infrastructure is already there, right? Obviously, there'll be a little bit of cost, but it's not going to be as much as the revenue you're going to make. So this operating margin will continue to grow. Also, they built a factory in Europe, which means that they don't have to deliver cars from China anymore. So you can imagine that shipping costs will go down, etc., etc. Okay, so the company is still looking forward to a record-breaking Q4, CEO Elon Musk said on the call with investors Wednesday. So it really, knock on wood, it looks like we'll have an epic end of the year. So that's like actually a fantastic quote about what the CEO is saying about this company. I would put that as a headline because that's really where the direction Tesla thinks they're going. So for them to kind of harp on this production or this delivery number, to me seems a little bit misleading, right? So they do it again. But while the company said over a multi-year horizon, we expect to achieve 50% annual growth in vehicle deliveries, CFO Zach did concede during the investor call that on the delivery side, we do expect to be under 50% growth due to increase in cars and drives of the year. So I explained that earlier. By now, you understand why there's a gap, because these cars will be on boats, right? Fundamentally, that doesn't affect the business at all. So if you don't really know what's going on, you're reading this, like you think, oh my God, it's so bad, they have these logistical issues or whatever. But really, it has no effect on the business, right? Because those cars are already built, they're already getting delivered, someone's already bought them. It doesn't matter. And they make a big deal here. Oh, this is a big step back from when they were saying in July that we were going to hit 50% growth this year. Once again, Zach literally says, as we plan ahead, our plans are to show that we're on track for 50% annual growth production this year. And they go, oh, by the way, some of these cars will be on boats, so it's going to be a little bit gap in the delivery side. So it really, really does not matter. And I'm not being like super, biased here. I think that it doesn't matter to the business at all. And I can make that argument, which is why I find this article to be really misleading. And then, yeah, right here, Musk insisted that Target missed on the results of the logistic problem. I kind of covered that. He says that because they're rushing everything in a short period of time, there's really not enough ships or trains to actually deliver all these cars. So it makes sense to even it out. And then it's going to reduce costs as well. Okay. We have excellent demand for Q4. Musk said factories are running at full speed. We're delivering every car we make. So kind of covered that already. Okay, so here we go. Company posted adjusted earnings up 3.7 billion. Up 75% from a year ago. So just keep in mind, company posted earnings up 75% from a year ago. At this scale, they're doing up 75%. All right, this is big news. And they throw in there, but it's still short 2% of record earnings it had in the first quarter. All right, is that relevant to throw in? I think it's debatable, but you can tell they're trying to make everything sound like a negative. I mean, why is there a little bit of a gap between Q1 and Q3? It might be because America's dollar is up a lot, so their average selling price of all the other countries are down, which is why they get a lot of revenue. Or they say in that there's actually an effect on that about I think it was like 2 or 3%. So maybe that's where it went. I don't know. This guy didn't want to dig into that for some reason. Revenue did reach record 21.5 billion, up 56% a year ago. All right, so just keep in mind let me translate this. They're growing 50% or more than 50% from a year ago. Oh, but it fell short of the $22 billion forecast by analysts, which is $500 million off of this number that these analysts made up based on information that Tesla gave to them. All right, so that's a negative for some reason. Okay, so shares of Tesla were down 6%, market trading, they already lost 37%. Okay, blah, blah, blah. So the stock's relatively modest decline Wednesday is likely because investors were already expecting Tesla to concede. It would hit 50% growth figure, says this guy, Dan Ives. But even missing the target was a surprise. It was a hit for the company whose valuation was based on growth prospects, he said. So there's this, it sounds like this article is painting this story where the growth story is not there anymore. I don't know how many times I have to repeat it. It is growing at 50%. All right. That's a fact. Okay. This quarter was not all roses and rainbows. The delivery miss. Once again, delivery versus production numbers is a nuance. I explained already. Combined with them taking their medicine, recognizing they're not to hit 50% number. Investors are so used to Tesla being center of the story since 2018. Essentially, the clock has struck midnight. Competition is increasing. There are logistical challenges. Okay. Okay, so just let me clarify this real quick. Logistical challenges on delivery, they're working through that. That's why they're changing to the way they deliver it, right? The whole reason Tesla's really good is because they're really good at manufacturing and they're producing every car that they sell. When you talk about competition, there is no demand issue. So even if the competition is increasing, Tesla's still selling every car they produce. So the more competition there is, it doesn't really matter until Tesla comes to a point where they can't sell all the cars they produced, right? Competition fundamentally does not matter. I mean, they only have like 1.5, maybe 2% market share of all cars in the market. So that's not a big number. That's not a very big number. They're going to be able to sell their cars, right? The next challenge facing Tesla is talking about Twitter, blah, 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 plays out. You know, okay. Move forward. I don't think I have anything to say about this. Just talking about Twitter. I don't think it's relevant. Yeah, Bones needs to just pilot a plane, but I mean, these are like opinions on Twitter. Okay. In an effort to boost the company's stock price, Musk did tell investors that it is likely that company will do a share buyback on an order of $5 to $10 billion worth of stock. Okay. That's actually huge news, right? Tesla's going to do a stock buyback, and they try to paint it as an effort to boost company stock price. They don't have any mention of, hey, we're actually printing so much cash, we can't invest anymore. We are investing all the money that we can, and we still have so much extra cash left over. We're going to do a share buyback, right? They're painting it, oh, we need to boost the stock price, we're going to do share buyback. So this is actually good news. They're painting it as a negative. The company has never done a share buyback, so that's good, right? Instead of shares values climbing in the past, they have frequently sold shares to raise cash reserves. Okay, so basically they're doing the opposite of what they did before. Shares briefly shaved the aftermarket losses when Musk mentioned the buyback, only to see stock lose even more ground after the company moved off its 50% sales growth. So once again, I don't know how many times they said they're gonna miss 50% of sales growth, but like they're not. They're fundamentally not gonna miss that 50% growth, and they're not guiding for that either. And they've been growing 50% or more. So it's just, to me, if you don't really know the company and you're reading this article, you'd be like, oh my god, Tesla's doing so poorly. But in reality, this is just a poorly written article. I don't think it was well researched, or they're purposefully just trying to shit on Tesla for some reason. So a couple other things about Tesla I think is important. You can see here in their free cash flow, Tesla made in free cash flow $3.3 billion this quarter. Okay, which is a record quarter. And free cash flow is really all the money that cash they actually made. That includes like all the operating expenses, all expenses they spent building those factories that aren't really producing a lot of cars right now, right? And that's because that's the ramp. When you build a factory, it takes a while to ramp up. So imagine what's going to happen with your income or your cash flow when you start building more cars, and you don't have a huge operating cost to it because the factory's already built, right? So this number will only grow up. Keep in mind, Tesla's free cash flow for 2021 last year was about $5 billion. Now in one quarter, they're doing $3.3 billion. So, I mean, that sounds like 50% growth to me. So yeah, there's really a huge opportunity for Tesla, and I just want to make this video because if you're reading this article, and this is not the only one. This is actually not even that bad, but there's a bunch of articles out there where it talks, it has all these opinions and stuff, and they don't really take everything into full context. I just feel like you could get the sense that, oh, Tesla's not doing well, but this is actually a really good quarter. They have so much money, they're buying back stock, right? And if you think about the future, that's only going to increase, right? They have factories not really building any cars right now. That's going to scale up. What are they going to do with that money? Full self-driving is coming into play. I mean, even in the call, they said full self-driving is going to be fully released this quarter, right? They're going to start recognizing that revenue, right? So there's a lot. They're delivering the Semi in December. So there's a lot going on here. And I think that this article is misleading, and just wanted you guys to know what's actually going on. I hope this helps. And yeah, I'll see you in the next video. Thanks.